Okay, so welcome back. Here we have some set of important questions for discussion with adjustments. The first question, it says that there are two partners, namely X and Y. Okay, so these two partners have given some of the information which is available on admission of a new partner called Z. The profits for the last 4 years were given to us starting from 1819, 1920, 2021, 2122. And in all these years, you have got only profits, nothing else apart from profit. And parallelly, it was given that in the year 1819, the amount of 30,000 rupees what you got as a profit, it is after including an abnormal gain of rupees 10,000. Similarly, in the year 2020, that is 1920, you have got a profit value of rupees 20,000, but this is after excluding abnormal loss of rupees 14,000. Apart from that, we don't have anything given for 21 and 22. It is mentioned very clearly that goodwill of the firm is to be valued twice the average profit of either the last 3 years or the 4 years, whichever is higher. So calculate the value of the goodwill of the firm. So here, when they have made it very clear, there are some conditions involved in the problem. Okay, what is the condition if you see? One condition stating that average of 3 years or 4 years. Okay, 3 years average or 4 years average. Okay, whichever is higher. Okay, whichever is higher. So this is a condition. And then if you see the adjustments, okay, they're talking about two adjustments. What are those adjustments? If you see, one is about abnormal gain. Okay, one is abnormal gain. The second one, if you see, it is abnormal loss. Now you tell me what should be the treatment given for abnormal gain and abnormal loss. Abnormal gain, has it been added or it should be subtracted? Abnormal gain.
Subtracted, sir.
Very good. So it should be minus. Okay. And what should be the treatment for abnormal loss?
Added, sir.
It should be added. Okay. But remember, this add and subtract you will do provided if it is included or if it has been considered. Am I right? Only
Yes,
if
sir.
only if they have been included in that particular year's profit, this is the accounting treatment. But see what they have mentioned in the question. For 1920, for 1819, 30,000 rupees profit, that includes abnormal gain. So that means abnormal gain has been included. So you will do this treatment and you have to derive the value. But for 1920, if you see, it is mentioned very clearly excluding abnormal loss. That means they have not included the abnormal loss. They have excluded it, which means while taking the or while computing the profits or loss for that year, they have followed the accounting principle perfectly. So nothing is to be done for that particular year's profit or loss. It should be taken as such. So that given adjustment is just to divert our attention. By doing something wrong, you will get a wrong value, and once you get a wrong value, the average profit will go wrong and goodwill will go wrong, and they can block your center. So that is a specialty of it. Just blindly don't go ahead with the problem. If it is an abnormal gain, just minus it. If it's an abnormal loss, just add back. Make sure only if they have been considered. Okay, if they have been taken into account, you should do this particular accounting treatment. If they have not been considered, if they have been excluded, then obviously whatever they have done is 100% correct. So neither you need to add nor you need to subtract. Am I making it clear to you now?
Yes, sir.
Okay. So now the second one, 3 years or 4 years. Okay. When this is a case, always remember the year starts from, okay, first let us take it for 3 years. Okay. 3 years average. and then side by side we'll also work it out for the 4 years average. We are going to write the profit. Okay, in a given series, what is the year that starts with? It starts from 19 and it ends by 22. So in this given series of 4 years, which is the recent year? Among these 4 years, which is a recent year?
2022, sir.
Okay, so that means always a recent year should be given. Okay, the importance as it is a first year. Okay, so this will be as a first year. The previous to that year will be your second year, and previous to that year will be a third year. So when they say 3 years, okay, you will be taking into account the 19 and 20, 20 and 21, 21 and 22. These are the 3 years which you will be taking into account for 3 years calculation. When it comes to 4 years, all the 4 years will be taken into account. This is clear to you?
Yes, sir.
Okay, so that means I'm going to first take from 1920. Okay, so let's start from 1920. 2021, 21, 22. Okay, so in the year 1920, check out whether do you need to add or subtract anything with that given value of 20,000.
We should subtract, sir. We should match, sir.
Check out properly and say in the year
19,
1920.
19, 20, 20,000 exclude it, sir. Subtract, sir.
Be careful, tell me properly. Should you
Sir, we should
add?
add, sir.
You should add. Just now I said it
Of
was
no, we should not do anything, sir.
it is mentioned very clearly
We should not,
excluding,
we should not do anything, sir.
neither to be added nor to be subtracted. You should take the given value as such. For this purpose only I have selected this question. Okay, so the 20,000 will be the profit as such. Okay, so this a year and the profit was rupees 20,000. Okay, in the year 2021 also the profit value is rupees 20,000, and for the year 21-22 it is 38,000. Okay, 38,000. Now what will be the total? 48,000, sorry, 78,000 total profit.
Yes, sir, yes, sir.
This is for 3 years. Okay, 3 years total profit. Okay, now come back to the 4 years. So here it starts from 1819. Okay, 1920, 20, 21, 21, 22, and the value of profits. Just for 1819, you check it what is given to you. It was given 30,000 rupees as original profit, but what you should do? They are
We should
given,
subtract, sir. 10,000.
yes, so 10,000 if you subtract, it will give you 20,000 only as your profit to be taken. So I'm just taking the value of profit alone, 20,000 rupees. Here 20, here 20, and here it is 38. We know very well that earlier I got 78,000 for 3 years. Now 1 year is got added and that value is 20. So 78 plus 20 will give me how much?
98, sir.
98,000. Okay. This is just a total profit. We need to now find out the average profit. Okay, so average profit is equal to total profit divided by number of years. So that means 78,000 if you divide by 3, because this was 3 years and here it was for 4 years, right? So 98,000 by 4. So calculate and tell me what is this value. 78,000 if you divide by 3, what will be the average? 78 by 3, how much you'll get?
2600.
Very good. So 26,000, you're getting it for 3 years. The same way, find out what will be the value for 4 years. 98,000 if you divide it by 4. How much you'll get? 98,000 if you divide by 4.
One second, sir. Calculate, sir.
Okay,
24,500.
very good. 24,500. Now you go and check out what is the condition given in the question. The condition is average profit of either 3 years or 4 years, whichever is higher. So whichever is higher, if you see here for 3 years, I'm getting an average value is 26,000 rupees, whereas for 4 years, I'm getting the average as 24,500. So among these two value, which value is higher?
26,700. So
20
20,
26,000 is
27, sir.
higher. Okay, so 3 years is going to be taken into account. And how to value the goodwill is said. Goodwill is of the firm is valued at twice the average profit. So 2 times the average profit. So 3 years average is higher. So write the goodwill formula now. Goodwill is equal to your average profit into, there it is given as times, right? The question is given times. How many times they are given? Twice. So twice means 2 times. Okay, thrice means 3 times. So that means rupees 26,000 should be multiplied with 2. That will give me an amount of rupees, how much? 52,000. Able to understand this problem? So
Yes, sir.
in our textbook, if you see, we have the same type of problem on the illustration, but there the beauty is the 4 years average value will be higher compared to 3 years average, and most of the cases we to assume that when the years getting increased, average, okay, profit means obviously when one more year is getting added, that year 4 years will be higher, not the 3 years. But that is not the case. It can be of any value. Okay, it can be of any scenario. My question now to you people is, now I'm giving you a series of years. Okay, now listen carefully. Now I've given you a series of years starting from 2020 and it ends by 2024. And each of this year there is a profit or loss. Even that details is given to you. But there is a condition mentioning that you have to find out the average profit for 3 years or 4 years, whichever is higher, and then you have to find out the goodwill. So it is given the condition that goodwill, okay, goodwill is valued on average basis of 3 or 4 years profit. This is the condition I give you. Now, in this question, you check it up. How many years are given for you? Total number of years.
Four, sir.
No, in the series of years. In my question, in the series of years.
3 to 4 years, sir.
No, man, this is a condition, Kanna.
Yes, sir.
Condition is mentioned as you have to take the average of 3 years or 4 years, whichever is higher. Okay, goodwill is valued
Yes,
as
sir.
on the average of 3 years or 4 years profit. Okay, whichever is higher. Okay.
Oh, you're asking 5 years, sir.
Yes. So total number of years given in the question series. Okay, this is the first. Okay, I'm just saying 1, 2, 3, 4, 5. So totally I have given you 5 years. Okay, but the condition I made it very clear is either 3 years or 4 years average should be taken out of that, whichever is higher you take into account. Now you tell me for 3 years, which are the years you are going to take into account? And for 4
22,
years,
23, 24.
very good. So 20.
2, 23, 24.
Okay. So this, this. Excellent. When it's going to be for 4 years, which are the years you'll take into account?
21, 22, 23, 24.
Very good. So that means this year will not be considered. Okay, it is just to dilute our attention or divert our attention. So even such type of problem can be asked with this condition, 3 years or 4 years. They may give you 1 year excess or more than 1 year also they can give you excess. But look at the condition, 3 or 4 years if they're given such thing. In that case, you have to always give importance from the current year. Okay. The current year will take up the first position. From there, the previous year second, third, you restrict yourself given in the condition. Clear?
Yes, sir.
Okay. Now coming up the next question. Okay. What is given the next question? Okay. The next question says a partnership firm have decided to sell its business. Okay. So here one particular business is decided to sell their business. Okay. And they're asking you to calculate the goodwill of the firm on the base of 3 years purchases. Okay, so goodwill is to be calculated on 3 years purchases of what method? Weighted average profits of the last 4 years. So we have been given 4 years, and from the 4 years profit, we have to derive the average profit. And once we get the average profit, it is mentioned very clear goodwill of the firm is valued on the base of 3 years purchases. So with the help of 4 years average profit, we are going to apply 3 years purchases to derive the value of goodwill. The profit of the last 4 years were, so every month, sorry, every year 31st of March is a closing date. So 31st March 2018 profit of rupees 20,000, 31st March 2019 rupees 24,800, 31st March 2020 rupees 20,000, and 31st March 2021 rupees 30,000. The weights assigned to each year are, so as I said, in some of the problems, they will mention that assign the greatest weight to the recent year. In some of the problem, assign the weights accordingly they may give you. Whereas in some of the problems, they will map and give you what is the weight that you need to assign for that particular year, respective year. So according to that, here if you see they themselves was given one should be mapped for the year 2018, and 2 for 19, 3 for 20, and 4 for 21. So here mapping is not going to be a problem for us. They themselves are mapped and they're given to us, right? Any doubt up to this?
No, sir.
Okay.
No, sir.
And then it is given the question that you are supplied with the additional information, following information. What is it? First one, on September 1, 2019, a major plant repair. So plant repair has undergone, okay, was undertaken for rupees 6,000, which was charged as to revenue. Okay. So what has happened? On September 1, 2019, a major plant repair was undertaken for rupees 6,000, which was charged to revenue. Okay. The said sum, that is a said value. Okay, the value what is mentioned here is 6,000. The said sum is to be capitalized for goodwill calculation. So we are going to calculate goodwill, and it is mentioned that the said sum is being to be capitalized for goodwill calculation, subject to the adjustment of depreciation of 10 percentage per annum. On what method? On what
Weighted
method?
average.
No, no,
Weighted.
no. Depreciation
Yes, sir.
under what method? Depreciation is under what method, Kana?
Reduce balance.
Reducing balance method. Read this problem very carefully. There was a
Okay.
plant, okay, there was a plant which has undergone a repair. So they are going to repair the plant. And this plant repair is considered to be as a major plant repair. Look at the sentence how they are framed. On September 1, 2019, a major plant repair was undertaken for rupees 6,000. So the cost spent on the repair is 6,000, which was charged to revenue. What does it mean? Which was charged revenue in the sense you have considered a capital
Yes, sir.
expenditure. You have considered a capital expenditure as a revenue expenditure. First of all, what do you mean by the word repair? In general, repair means what? It is an amount spent.
Expenses, sir.
It is an amount spent as expenses. But what type of repair is this? If you see a major plant repair, when we say major plant repair, that means the amount what you spent is a huge amount. Here it is 6,000, but though it is 6,000, the word major is trying to represent that it is a vital one. And such type of repairs will not happen again and again. It happens quite okay. It will be very often. It won't be often. Okay, it's very rare, right? Such type of expenses, okay, will not incur again and again. It is very rare that will happen. So that means major plant repair is nothing but it is a capital expenditure, but you have wrongly treated them as a revenue expenses. Why? Because considering that is a repair charges, repairs means usually it is a recurring in nature, so you will take it as a revenue. But it shouldn't be taken as a revenue, it should be considered only as a capital expenditure. Right? I'm making sense to you.
Yes, sir.
Now tell me what is the accounting treatment for considering a capital expenditure as a revenue expenditure? You have taken wrongly a capital expenditure as a revenue expenditure. What is the correct accounting treatment for it? Should you add or you should subtract? Treating
Which
a treating a capital expenditure as a revenue expenditure. What you should do?
subtract, sir.
You should subtract. Capital expenditure treated as a revenue expenditure, you should subtract. You should subtract.
Oh, I think yes.
You should subtract.
I don't remember that line, sir.
No, I'm not getting you, Kana.
I don't think in the reader we have the given line, sir. Capital expenditure should not be like added
Okay,
for the expense.
fine. If it is a capital expenditure treated as a revenue, it should be added back. On the reversal way, if it is a reversal statement, a revenue expenditure is being treated as a capital, then it should be subtracted.
But, yes, sir.
Okay, when a capital expenditure is being treated as a revenue expenditure, we need to add up. Okay, whereas when a revenue expenditure is being treated as a capital expenditure, you need to subtract it. Okay, or I'll give you another way,
Yes, sir.
easy remembrance. This will be very silly, but still, there are many ways to make things understand. Capital expenditure starts with the alphabet C, right? Am I right? Capital expenditure means the word capital starts with the letter C. Revenue expenditure starts with the letter R. In alphabet, if you want to navigate from C to R, you need to travel or you need to pass D, E, F, G, H. So that means you have to cross them and reach this. So obviously between C and R there will be more than 10 plus of alphabets. So when capital expenditure is treated as a revenue, you have to add back. Got it? Hello? Hello?
Hello, sir.
Yeah, am I audible?
Oh, yes, sir.
Okay. The next one is the revenue expenses if you treat them as a capital. Now, from R, if you want to get back to C, then you have to go back. Okay, in the reverse. That means you have to subtract. It will take off. Okay, so when you want to move, navigate from R to C, it should be subtracted is C refers to your capital expenses, R refer to your revenue expenses. Okay, the same way here R refers to your revenue expenses and C refers to your capital expenses. So from capital to revenue add, from revenue to capital subtract. Am I making sense to you? Hello, Rohit. Okay,
Uh,
fine. No issues. Let them join up. Now, can you able to understand what I'm trying to say from this one?
uh,
Okay. And followed by that, now what you have done, you have gone with first case or second case. You have treated a capital expenditure as a revenue. Okay. This is the one which we are now to be considered. And moreover, what has happened is you have to calculate depreciation. Okay, you need to calculate depreciation. Why?
depreciation.
Because you have spent 6,000 rupees, which is a capital expenses. Okay, so for which you need to calculate the depreciation. That is what they said. Okay, goodwill of the firm, you are going to calculate it. Okay, and it should be capitalized subject to the adjustment of depreciation of 10% per annum. So that means depreciation should be calculated on that 6,000 rupees. Okay. But when that repair was taken place on 1st of September, right? On 1st September, which particular year? 2019. Okay, so on 1/9/19, okay, it just happened. That means when the year will get closed, it will get closed on 31/3/2020. Okay, so in this particular year only, this particular incident has happened. Now, what was the amount? The amount was 6,000. What is the depreciation rate? It is 10 percentage. Okay, it was given as 10%, 10 by 100. But how many months are there in this? Starting from September, October, November, December, Jan, Feb, March. So altogether, if you see, it is 7 months. So you have to calculate for the period of 7 months into 7 by 12. Cancel out the common two zeros from here and common two zeros from here. In 12 table, 12 ones are 12 fives are. Now, 10 fives are 50, 50 into 7. It will be as rupees 350. So, rupees 350 is nothing but your first year depreciation. Okay, the first year depreciation, which means for 1920. Okay, for the year 1920, this is your depreciation. But the question doesn't stop with the year 20. It is also showing that there is a year got 21. So that means we now have to calculate the depreciation for the second year too. That is 2020 to 2021. And here you have to be remembered what is said with respect to depreciation. It is given very clearly that you have to calculate 10 percentage per annum on depreciation on what method? Reducing balance method, which is nothing but it is your WDV. Okay, this is nothing but it is your WDV, written down value method. So in written down value method, what you will do when you are going to calculate for second year, the book value will get changed, which means old one was 6,000 rupees. In 6,000 rupees, 350 rupees has gone as depreciation for the first year. Okay, that means out of 6,000, if you subtract this 350 rupees of depreciation, what will be the remaining balance? It will have an amount of rupees 500, 5,650. Now, for the second year, you will calculate depreciation on this 5,650 rupees for the full year at 10 percentage. So cancelling the common zeros, you will be getting an amount of rupees 565. So now you are done with the depreciation calculation also for 2 years. This you have to take a corrective action. Depreciation should be subtracted. Okay, the amount of depreciation should be subtracted, whereas the value what you have considered as a revenue expense 6,000 rupees should be added back. So these are the two corrective actions to be taken with respect to the first adjustment. The next one, if you see the closing stock, they talk about the closing stock. Closing stock for the year 1819 was overvalued by rupees 2400. So now they're targeting a particular year which is 1819. That means profit for the year 2019. That is what it means. Okay, when they say 2018-19, that means you are all should understand that it is on the year 2018-19 means this particular year 19 only you had to take into account. Okay, in this particular year, what is the value? If you check it up, they have said in the year 19, you have got a profit of rupees how much? What's the profit for the year 19? 24,800. Okay, they are mentioned as rupees. Okay, 24,800.
800.
Okay, what is said in the question if you see? The closing stock for the year has been overvalued. So, this particular year, if you see overvaluation of, okay, it is overvaluation of our opening stock. Okay, overvaluation of the opening stock. So if overvalued, the opening stock is getting overvalued, then the amount to what extent it has got overvalued has to be added back. Okay, we need to add the amount. That is the accounting treatment. So to what extent it got increased, overvalued by 2400, that you have to add in this particular year's profit. So from 24,800, if you add 2400, whatever you get, that is the profit for the year 1819. So from 24,800, if you add 2400, you are getting 27,200. So that means the profit for the year 1819 is rupees 27,200 and not an amount of rupees 24,800. Is this clear to you? Is this clear to you? Okay. The next one, to cover, this is what we say most important, to cover management cost and annual charges of rupees 4,800 should be made for the purpose of goodwill valuation. So they have said very clearly there is something called as a management cost, and to cover up this management cost, an annual charge of rupees 4,800. So which means every year, okay, every year this 4,800 amount should be subtracted. Okay, management cost vandale. When the adjustment talks about the management cost, that amount whatever is mentioned in the question, it should be subtracted. But here they are not pinpointing any particular year in particular, whereas they are specified very clearly in the adjustment stating that it is to cover up the management cost and annual cost of rupees. So that means in every year profit, the amount should be subtracted. So in this problem, if you see, we have got 4 years, right? Starting from 2018 and up to 21. So 18, 19, 20, 21. First, let us write those 4 years here. Okay. The 4 years are 2018, 2019, 2020, and 2021. Okay. So first let me write the profits or the loss value given for each of this year in the given question. So for 18 it is rupees 20,200. Okay, 20,200. In the year 2019 it is given as rupees 24,800, and in the year 2020 it is given 20,000 rupees, and in the year 21 it is given as rupees 30,000. Okay, these are the value of profits which the firm have earned during these respective years. Now, the first adjustment it talks on 1st of September 19, the major plant repair. So that means it is touching on the year 19 to 20. So in 1920 profit. So that first adjustment is going to be on this particular year. Okay, 1920. Okay, here if you see the value 6,000 is considered to be as a capital expenditure, but you're wrongly treated as revenue. So capital, if you treat it as revenue, you should have to add back or you should have to subtract it. You should add back or you should subtract it. You need to
And
add back. So in the year 1920, that means over here. Am I right? 1920 நால இங்க வரும். அப்ப இங்க வந்து ஒரு 6,000.
uh,
Okay, 6,000 you are going
and
to add back. Okay. The next one, you have also calculated depreciation for those, okay, capital expenses that comes to two different years, and the values are for the first year it is 350 rupees. So that means 1920. In this year, you have to subtract an amount of rupees 350, and in the second year over here it should be as 565 should be subtracted. So now we have taken the corrective action for the first additional information. Now come to the second one. Closing stock for the year 2018-19 has been overvalued by 2,400. So 18-19, that means we are now going to focus on this particular year. Now it is given very clearly overvaluation of which stock? Closing stock, is it? Okay. So the closing stock for the year was overvalued. I'm sorry. I made a mistake here. I'm sorry. Okay. It is not addition, it is a subtraction. Overvaluation of closing stock. Okay. So if closing stock is overvalued, it should be subtracted. So which particular year they are talking about? If you see, it is the year they're talking as 18-19. Okay, so that means 2018-19. Okay, in the year 2018-19. Okay, your closing stock overvalued was 2,400. Okay, and what is the profit for 18-19? 24,800. So from the value of rupees 24,800, we need to subtract the amount of 2,400 because it is a closing stock. Okay, when you subtract this, what amount you'll get? Okay, that you'll write it off there. But still, one more concept you have to understand is, okay, here you overvalue the closing stock. The closing stock base பண்ணி ஒரு கான்செப்ட் இருக்கு. What is it? Closing stock of this year, closing stock of this year will be the opening stock. Okay, will be the opening stock of next year. This you all have learned in your 11th standard also. Okay, the closing stock of this year will be opening stock of next year. When your open closing stock has got overvalued, okay, in the year 1819, after 1819, what is the year? It is 1920. So in this year also, there is an overvaluation, but it is not in the opening closing stock. It is on the opening stock. So this is the concept. Okay, the value of your closing stock has increased. That means in that particular year it has got increased. The closing stock of the current year will be the opening stock of the next year. So the next year here comes as 1920. So here you will consider this as over valuation of opening stock. Okay, here it is opening stock because previous year closing stock, current year's opening stock. So you
opening
should
stock.
give importance as opening stock, but it is same. இங்க என்ன இருக்கு ஓவர் வேல்யூடா இருக்கு அதேதான் இங்கேயும் இருக்கு. So overvaluation of opening stock means it will be added. Okay, if your opening stock is overvalued, it will be added. So now the next year, okay, that means 1920. Okay, in that year you have to add back. Okay, so இங்க நீங்க என்ன பண்றீங்க சப்ட்ராக்ட் பண்றீங்க என்ன வேல்யூ 2400 and 1920 in the yearல you should add back the value of rupees 2400. Any doubt up to now?
No, sir.
Any doubt up to this?
No, sir.
Okay. So up to this it is clear. Right. The next one, okay, if you see, they are mentioned as to cover the management cost, rupees 4,800 should be made for goodwill purpose, but this is on annual charge. So annual charge means every year. Okay, every year it should be charged. So management cost means it should be subtracted, right? What is the value? 4,800. So that means from 18. In the year 18, you have to subtract 4,800. In the year 19, you should subtract rupees 4,800. In the year 20, you should subtract rupees 4,800. In the year 21, you should subtract an amount of rupees 4,800. Now we have taken the okay adjustments all into account, and we have just transferred to that particular year's profits either by adding it or subtracting it. Now derive the value what should be for 18, what should be for 19, what should be for 20 and for 21. Just calculate it. So from 20,200, okay, from 20,200, if you subtract the value of rupees 4,800, what will be the remaining value? What is the remaining value? What is the remaining value? 15,400.
2,400, sir.
Very good. So rupees 15,400. Okay. Similarly, now comes for next year. Okay. From 24,800, if you subtract the value of rupees 2,400 and also the value of rupees 4,800, how much you'll be getting up?
One second, sir.
17,600.
1 minute, sir.
Okay.
Good.
Check it out. What value are you getting? 17,600 there.
Yes, sir. 19,600, sir.
Okay. Now in the same way, let us calculate it for the year 2020. What is the value that we get altogether? So 20,000
Oh,
plus 6,000 is 26,000, and 26,000 plus 2,400 is nothing but 28,400, right? So we are done with these three additions. We are done.
yes, sir.
Okay. Now we need to subtract an amount of rupees 4,800 and an amount of rupees 3,350. So if you do this, how much you'll get? So by doing it, how much you're getting it? Are you getting rupees 23,250? And finally, you have to find out for the last segment. So 30,000. With that, you have to
23,250 for
yes.
2020, sir.
Okay. From now for 21, from 30,000 you subtract 565 rupees, and again you subtract an amount of rupees 4,000. You will be getting an amount of rupees 24,635.
Oh, right, sir.
24,635. So now we have got the normal profit. That is after adjustment, we have got the profit for each of these years. But still, the question not got over. Calculating goodwill is still there. It is on what method? It is on the method of weighted average. We have to assign the weight as 1, 2, 3, and 4. So still
Alright.
calculations are pending. So what you should do? You have to write the year, then you have to write profit or loss, then you will write weights, okay, profit or loss in terms of rupees, and here, okay, weighted profit. Now 2018 onwards, 18, 19, 20, 21. The value of profit or loss, you should take these values: 15,400, the next is
17,600,
17,600, the next is 23,250,
250,
and then finally 24,635.
24,635.
Okay, now assign the weight 1, 2, 3, 4. Now you just multiply this, and this value should also be marked in rupee symbol. Weighted profit should be in the marked in rupee symbol. So 15,400 into 1 will be 15,400 itself. Next,
400.
17,600 should be multiplied with 2. What value you get? You'll get 35,200,
Yes, sir.
and then 23,250, if you multiply it with the value of rupee with 3, it should be as 69,750, 69,750, and finally 24,635. If you multiply it with 4, you will be getting an amount of rupees 98,540. 98,
Very good.
okay, 540. Now you got the weights and you got the weighted profit. So total these weights: 1 plus 2 3, 3 plus 3 is 6, 6 plus 4 is 10. Now you add all these values: 15,400 plus 35,200 plus 69,750 plus 98,540. By adding all this, how much you're getting it? Tell me.
Nice, Saman.
Yeah. So by adding these four values, how much you're getting it? Okay. In the meantime, let me write the formula for average profit, weighted average profit. So weighted average profit, if you want to derive it, it is nothing but total weighted profits to be divided by total weights. So now tell me how much you got as a total weighted profit. 2,18,890. 2,18,890. Are you getting this value?
Two
Check.
lakh 18,890.
Yes. So now you substitute it. So 2,18,890 is the value of your total weighted profit. Okay. So this is nothing but
Yes.
this is your total weighted profit, and below the total weight is 10. So when you cancel the common zero, your weighted average profit will come to an amount of rupees
Thousand
21,889. Right now, Goodwill, what they
Yes, sir.
said, how many years? to be taken into account. Goodwill is being valued at how many years purchases? The goodwill is to be valued first line requiring. Calculate the goodwill of the firm on the base of how many years purchases?
3 years, sir.
3 years purchases. Okay. So now let us calculate the 3 years purchases. Write the formula of goodwill. So goodwill is equal to, okay, your weighted average profit. Okay, your weighted average profit to number of years purchase. So according to that, your weighted average profit came to an amount of rupees to 21,889 into how many years purchase was given the question? 3 years,
3 years
right?
of purchase.
So calculate with 3 and find out the amount. What is the amount? Are you getting an amount of rupees 65,667?
1 second. Yes, sir.
Okay.
55,000.
Yes. So I'm just stopping it over here. Okay. We have discussed so far how many problems if you see. Okay. We have discussed two problems as of now. Okay. Out of seven
Okay.
problems which I had, we have discussed only two. Still there are five more
Uh,
problems to be discussed. So which will be discussed, okay, by tonight evening or by tomorrow, and all these will be
okay, sir.
uploaded in the site. Please go and watch it, and please make sure that you understand the concepts, right?
Okay, sir.
Okay, ma. Thank you.
Thank you, sir.
Welcome.